Did you know that Cathie Wood claims that everyone will vanish from the markets in 20 days? Wood has grown to be a prominent person in the financial sector, and her advice is often followed. To find out what Wood meant by this, stay watching and tuning in. Undoubtedly, this economy of ours is one for the record books, and not in a positive sense. Not only is the banking sector beset by risks of inflation and a worldwide recession, but so are the other industries that follow suit. These financial difficulties had impacted even large companies like Tesla. The top EV manufacturer is currently making every effort to resolve these concerns, as well as other troubles the business is having. You'll discover why in today's video. Cathie Wood predicts that all traders will vanish from the markets in 20 days. Star investor Cathie Wood adds, "The bad news is that the Fed has become extremely aggressive and hawkish. The good news is that we are beginning to get data that is confirming that the U.S. economy is in a recession," Wood stated. She thinks that since China and Europe have also been experiencing a recession, it can now be referred to as a global recession. The founder, CEO, and CIO of ARK Invest, an investment firm with $60 billion in assets that makes bets on cutting-edge technologies like genomics and self-driving cars, is Cathie Wood, an American investor and celebrity stock picker. Because she not only has the evidence to support her remarkably astute statements about investments, but she is also extremely compelling in her arguments, Cathie Wood is frequently referred to as the most underestimated investor in the game. Cathie Wood offers monthly updates on a variety of topics, including innovations, expectations in her area of expertise, monetary and economic policy, and her thoughts on Fed decisions. The United States Central Bank, the Federal Reserve System, or Fed for short, is in charge of overseeing the country's financial and monetary systems. Wood went on to say that there are a growing number of signs that prices are beginning to decline, and she believes that the inflation that has everyone concerned is now a false perspective on the state of affairs. She underlined their conviction that the greater risk is deflation. "We believe that deflation is a much bigger risk," Wood states. "They have been saying this for a very long time," she continued. According to Wood, they have faced mockery and even challenges from those who firmly believed that the United States was experiencing inflation like to that of the 1970s. In economics, a recession is by definition a contraction of the business cycle characterized by a widespread downturn in economic activity. It is a brief period of economic downturn marked by a reduction in commerce and industrial activity, which is typically indicated by a decline in GDP over the course of 2 quarters. Recessions typically result from a sharp decline in consumer spending. The rate of price growth during a specified time period is known as inflation. Usually, inflation is measured broadly, as in the case of a country's cost of living increase or general price increase. Conversely, when the inflation rate drops below 0%, there is a decline in the overall level of prices for goods and services, which is known as deflation. Over time, inflation lowers the value of money, but abrupt deflation raises it. We think that the pricing action, and I'm not just talking about stocks and bonds, I'm talking about commodity prices, crypto prices, and perhaps soon even housing prices, that many people will conclude the greater risk is deflation, Wood stated. While Wood maintains that she does not believe deflation in and of itself is a terrible thing, she does believe that the Fed's attitude to it is. According to Wood, deflation can be beneficial if it is brought about by advancements in technology and science, and the United States will undoubtedly experience a lot of it in the future. However, they currently predict severe deflation, which the U.S. economy will have to overcome. Wood stated that the Fed will exit its quiet period at the next meeting, which is why all of the Fed governors have been scuttling away, predicting that the U.S. will lose an additional 75 basis points. Wood thinks, she stated, "We think that they will rethink that as we get not only more pricing signals, but earnings reports and guidance from companies who will probably be confirming that the U.S. is now in recession." Recall that Cathie Wood issued a warning that the United States was already in a recession in late June. In a CNBC interview, CEO of ARK Invest, Cathie Wood acknowledged that she had misjudged the level of inflation and went on to say that the U.S. economy is probably already in a recession. Why, in your opinion, does Cathie Wood still firmly believe in Tesla, even in the face of such dire economic circumstances that will undoubtedly impact the business? Please share your thoughts in the space provided for comments below. According to Wood, the current inventory recession in the United States is rather severe, but it will not resemble the systemic recession and financial crisis of 2008 to 2009 in the slightest. It will be more of a garden variety, she clarified. According to a 2008 analysis by the Federal Reserve Bank of San Francisco, the average length of a U.S. recession from the mid-1940s to 2007 was 10 months, with the shortest recession during that period being only 6 months. According to Wood, innovation is resilient to recessions. He cited the recent return to growth stocks as evidence of this trend, since their growth rates outpace those of the market as a whole, which is more susceptible to cycle fluctuations. We know that innovation in the public equity markets, not the private equity markets, has been ravaged in the last year, Wood stated in a recent interview. It has been devastated for almost a year, and Rawls said that as expectations shift, there is a chance that the economy may open up, leading to an increase in interest rates and inflation, but it will eventually stabilize. The problems with the supply chain persisted last year in spite of the modification. That being said, initially affecting the innovation space, the worry of what inflation and interest rates would do now appears to be affecting the market a little more generally. Wood attributed the increased price pressures beyond her initial projections to supply chain interruptions and geopolitical concerns, such as the conflict in Ukraine. She added that a recession had already started, mostly due to poorly managed inventory. "We believe that we are in a recession," Wood stated in an interview with Andrew Ross Sorkin of CNBC. "We believe that inventories, whose growth I've never seen this significant in my time, are a major issue. I have 45 years of experience." The investor who prioritizes innovation claimed that supply chain disruptions and geopolitical concerns are to blame for the unexpectedly high rate of inflation. According to Wood, problems with the supply chain caused big merchants to mishandle their inventory, which resulted in an abundance of some completed goods, such as furniture, which was in high demand during the epidemic. She claimed that issues still plague even the world's most well-run businesses. She continued by saying that in her 45-year career, she has never seen an inventory spike like the one that has occurred during the last year. "We were wrong on one thing, and that was inflation being as sustained as it has been," Wood stated. "The supply chain finds it unbelievable that it has taken more than 2 years, and naturally, we was unable to observe that. Though it has prepared us for deflation, inflation has been a greater issue," according to Wood. "I think the fears here are going to shift from rising interest rates and higher inflation potentially to recession, especially, and you've heard me on this before, because we've seen inventories piling up throughout the ecosystem." Wood claims that throughout the past year, the share of innovative stocks in the public equity markets has decreased from 50% to 75%. According to Wood, sentiment data has reached all-time lows, suggesting that consumers are experiencing the effects of the sharp price hikes. She cited consumer surveys conducted by the University of Michigan, which revealed a reading of 50 in June, the lowest level ever. According to the Consumer Price Index, inflation increased at its quickest rate since December 1981 in May, up 8.6% over the previous year. Professor Jeremy Siegel of the Wharton School of Business agrees with Wood that the United States is currently experiencing a recession. Siegel stated to CNBC that the first half of the year's economy most certainly shrank. He went on, "I think we're actually in a mild recession," adding that the signs he was keeping an eye on pointed to a slowdown in the economy that would continue into the third quarter. He claimed that data on the money supply in the U.S. had decreased, indicating that inflation may be under control. Check out our other videos on our channel for more information about Tesla stocks.